Hello, folks. Brandon Chapman with you today. It's another edition of a Theo Night video. This is for Tuesday, July 12th, 2022. Corey and I did the switcheroo. I normally do Mondays, but we're coming here early today because we're traveling and stuff. We want to get it posted so you can have it. But anyway, Brandon Chapman with you today. And again, we're going to talk about the market. We're talking about specifically small business optimism failing, home sales cancellations. It's okay. It's Prime Day. And of course, all things spending, debt related, helping to fuel the market. So we'll see where things finish today. We're a few hours into the session. So far, we're basically flat, unched from yesterday. We're about wrapping up this historically bullish 2-week period, 10 trading days that began on the 29th. I talked about background then as well. The idea is that this 10-day period, according to Bespoke or it's not Farmer's Almanac, but Trader's Almanac. This period from June 29th, 10 days forward, the best return of any 2-week period, going back for 20 years. So 2.15%. So again, we're kind of firming up here. We may roll back to prior highs at 3,900, maybe 3,950 in the coming days as things are firming up. There's some bullish option activity we'll talk about today, a number of issues. But again, let's look at home builders for just a second here. So we'll look at KBA. We'll look at IDB start. This is an ETF. So home construction, we're higher today, right? So we're up about 1.3%. Probably a bit of optimism, just centering around the idea that 10-year treasury yields are falling. Falling treasury yields, obviously borrowing costs go down. June for a 30-year mortgage, it was around 6%. We saw, 600,000 cancellations, which amounted to almost 15% of contracts that were signed in June. So we're talking about significant numbers of cancellations. People can't afford. I mean, we've talked about, Blake and I, TheoTrade for our Wednesday at the close for our TheoTrade members last week. And we're talking about, 40%. Rise in your mortgage costs. I mean, this is a big deal. And people are canceling because they just can't afford it, or they're holding back. Maybe they're deciding to, maintain, or I want an inspection just so they can find ways to get out of it if there's any issues. This is a really hard time to want to buy a house. Hopefully prices decline, but prices have gone up so much. You're going to need a substantial decline in prices just to get back to where we were kind of maybe 5 or 6 years ago. So, a lot of uncertainty out there regarding home prices. And of course, as you think about home builders, yes, we're higher. It's Prime Day after all, right? All things consumption. Let's cause stocks to go up. Financials increasing 1% today despite falling yields. Dogs and cats living together. I mean, it's just kind of a crazy market environment. But again, we're wrapping up kind of a historically bullish period. And now we're flipping green on the SPY, for example. Again, near-term resistance, 390 to 393. So we'll circle back to this, this home builder. We're going to look at some activity in KBH. One last little note, I was in California last week. My brother-in-law, he's a good friend, he's a contractor. And, contracts of some big home builders down there. And he's having a meeting with, several of them that are canceling projects. And builder cancellation rates are up a lot, right? So, for example, in Texas, 27% in June of this year versus 12% last year. SoCal, that's where I just was, and we were just vacationing. 10% this year versus 4% last year, and we're probably just on the cusp of starting to see the cancellations in terms of building projects. So a lot of plans, permits, explosion in permits. Are we going to see a kind of a contraction? Obviously, we look at small business sentiment. Headline today, record low. So why is the market higher here right now? Again, remember that bear markets don't go down in a straight line. It takes time. We're also talking about kind of a quiet period. It's summer, volumes are down. We had a major holiday in here, and we're just about to get into financials earnings, right? So for example, JP Morgan. So right now, financials are up the highest today. JP Morgan snapping back a little bit. Well, we're gonna have a pretty good announcement coming up on July 14th as they kick off bank earnings, for example. It's going to give us kind of a state of things. And as we think about JP Morgan, we want to think about how much money are they setting aside for loan loss reserves. This is probably the number one thing that people aren't necessarily really considering, right? We look at the dollar surging here, right? It's just ripe with the idea there's dollar demand right now. But imagine what will happen with the money supply, right? If we're starting to see credit contract, and one of the early things to look at for JP Morgan, for example, how much is set aside in loan loss reserves? We saw them set aside more money last quarter, which hurt earnings. And as we continue throughout earnings season this year, it's not just this, last quarter. What did it give us? What are we seeing regarding the future? We have to really start to think about what is guidance. And that's the area that could really be hit. We could miss on some earnings, but the guidance is going to be a major potential problem for corporate earnings. So again, this quiet period is starting to kick off with JPM next week. And again, we start to consider the defaults. We start to consider other issues, downgrades yesterday, for example, in Under Armour and Lululemon. Didn't seem to really matter a whole lot, but we're going to see continued downgrades. Right now, we're just kind of setting aside. We're hoping that things work out well, hoping that the Fed gets on hold earlier rather than later, right? But again, as we saw from the Fed minutes in the June meeting, it seems like they're really positioned to raise rates quickly, but that was then. This is now. Recession is more imminent. So again, there's things that are kind of holding the market back from really liquidating. And as we look at the VIX right now, we're basically flat on the day. We saw a dip on Friday. Again, kind of testing this 24 area. This is a dangerous place for the market to sell off as the VIX rise, but we may see this push even further towards 20. So again, as we look at skew, what does this tell us? Skew rose yesterday to about 119. Skew is still fairly low in this 115 to 120 area. You start to get 130 or higher. Now we're talking about higher skew. Right now, the market wants to have exposure. They've underperformed, right? Institutions want to have exposure. They're not as hedged, right? They haven't reduced their portfolio delta as much. They want the upside if the market comes around. And again, when does that begin to turn? Watch the skew index. If this starts to rise, as the VIX settles in around 24, 25, again, we might start to see the opportunity to look for the downside. As we look at VIX 3M plus VIX ratio, you'll see it's about 1.07. Do we start to see an up day or two? The VIX starts to sell off and push towards lows. We did see it approach about 1.1, 1.2 the other day. But again, does this push higher? Over the last couple of months, this area about 1.1 has been a sticking point in terms of back month to front month volatility, that forward premium. If we push towards 20 and this pushes towards 1.2, meaning that the 3-month VIX is 20% higher than the spot VIX, VIX, this creates a great reset to say, hey, you know what? Time to reload. We're looking to go down. But as always with bear markets, it's hard to know when that happens. You look at Boeing today, for example. Boeing's up 7.5%. We're going to end up on a higher volume. We're breaking a resistance area. And look at this downtrend that we've experienced. We had a little consolidation phase here. We could draw a fib retracement just on this area and say, could we get to 167? Absolutely, we could. Well, what happened today? Well, Boeing delivered more airplanes, jets, what do you want to call them? More than expected. So again, is this putting them a better footing? Maybe. Could it lead to a bigger retracement? Sure. And you got GE in the mix there as well. GE. We got GM. We got Ford. But for GM and Ford, the moves are a lot smaller. There's a lot of volatility right now. So even a 3% move does not mean the same as it did a year ago, right? Or 2 years ago, 3 years ago. Because we're so volatile, right? The VIX right now is sitting at 26. If you're out there trying to pick direction, this is a very difficult market to do it. Even intraday, sometimes a lot of the movement occurs overnight. Not today, for example, because we open it very similarly. But the point here is that, look, this is a hard market to trade direction. So why do it? If you guys know Don Kaufman, right? Co-founder of TheoTrade, talks about selling premium. He has a very good track record in selling premium. and hedging. The inflection point spread right now, you can enter with a hedge and look to add more premium depending on how much exposure you want, how much return you want to get. You can dial it up. We have rules for how much of your portfolio should be allocated to something like that in terms of, if your allocation would be tied up in margin. We even have trade alerts we send out if you want something to follow. So the idea is this is a much better market to sell premium in. And I know we like to talk direction. We like to pick individual stocks. It's great. It's fun. But the reality is, what's the bulk of what you're doing right now? If you're sitting on the sidelines, you don't know what you're going to be, you don't know where to go or what to do. The VIX right now, and as skew increases, it makes it even better. The hedge is even cheaper. Again, for the idea of selling premium. Okay? All you need is $2,000, by the way. Okay? So, again, there's options out there to be able to sell naked and be hedged with smaller amounts of money. You just got to know how to do it. But anyway, that's the shameless plug here for TheoTrade and what we have to offer. But that inflection point spread strategy, we have hours of video, we have a written guide, we have an investing plan, and we have trade alerts, right? That'll walk you through it. And not to mention our daily sessions, which dawns on every single day for usually about an hour plus. So again, just to give you a heads up there. So as we look at the S&P, we're looking at stocks that are kind of leading out. A lot of industrials. We got WBA in here as well. Kind of some communication stocks and Charter and Comcast. These aren't really exactly exciting moves. And PayPal, are we really thinking consumer finance stocks are going to be the area of interest? PayPal or Capital One Financial? Capital One Financial gapped, and now we're rallying off the lows. Discover Financial Services gapped down and rallying off our lows. Are these going to be the stocks that carry you? Probably not. The idea is we're looking for opportunities to probably get short this stuff into strength. And at TheoTrade, we have something called the expected move indicator. When you start to break above that, it's an indication, hey, you may want to play a contrarian play. Look for that to come back in. So let's circle around back to Homebuilders today. So ITB. Again, an area that's we're rallying. We're broke to 61%. We may retest highs at 61. And right now, again, some benefit here as yields are falling, that there's some optimism surrounding here, but the realities of the data are coming in, and it's probably not fully being reflected in many of these stocks. So for example, KB Homes made a nice rally today, right? So last couple of weeks. In fact, let me just bring up the expected move indicator here. So I'll load study set and bring it. So it plots the expected move for the week based on Friday's close. And we start to push north of 32. This could be a nice contrarian play, right? We had a nice breakout here, moved beyond the market expectations, came back in. You usually get 2 consecutive weeks or even just, 2 times the expected move up here, for example, 34. So if this week we really we see the bulls kind of take hold, we push towards 34, this could create a very, very good setup to just go kind of buy in the money, sell out of the money on a long put vertical and play the downside. But somebody's already doing this, not as an in-out type spread. There's a strategy we have it at TheoTrade here. Again, alerts that are sent out on as well. But if we look at KB Homes and just look at some unusual option activity on it, this is for the August expiration. So we got a little timeout here. Notice this 29 and 25. Buying the 29 put, selling the 25. Buying the 53% and selling the 60%. The skew is favorable. It's lessening the cost here, right? Because you're buying the lower volatility, selling the higher volatility. I have a mastermind starting this week where we're going to talk about this stuff and how it relates to verticals and other types of option spread pricing. But 29, 25, again, there's an edge here, lowered cost, right? Costing over 90 cents-ish. But again, 10,000 contracts, buying the 29, selling the 12, mostly bought. And again, we're looking for downside to 25. Again, where's 25 here? We're basically back at prior support. Could that happen by August? Absolutely. It's an indication we're getting a little tired here. They're saying, hey, I'm going to take a little bit of a lottery ticket trade, buying a 29 and selling a 25, hoping for even some downside here. You make 4 if you're right. By expiration, you lose a little less than 1 if you're wrong. So again, not a terrible setup. Again, that's not actually a bad trade. It's not lower probability trade, but high reward, low risk. You could look for a little more of an up day, maybe even buy like a 31, selling at 29, straddling the stock price a little more. But again, there's lots of options here if you know how to trade spreads. But the idea being is that this is a decent trade that was sent out today, or someone did today in some institution, looking for downside that ties into prior support around 25. Okay. Let's circle around to commodities. So let's look at /CL. Now, oil's down about 7%. Now, obviously, recession fears are big, right? Now, as we think about oil supplies, I think Biden's going to Saudi Arabia. He's doing a trip. The realities right now is that, look, production is constrained and there's just not a way to get out of this box from a supply perspective. Could there be demand destruction? Absolutely. Right? So if we are truly angling towards recession or in recession already, does this start to bite? Are consumers finally getting tapped out? Is Prime Day going to push us over the top? Who knows, right? But the idea right now is that a little bit of demand destruction can be amplified because these are paper markets. There's leverage here. And obviously with a stronger dollar, this unwinding of leverage will play out negatively, but eventually the fundamentals will play out positively unless the fundamental picture changes. The way you check that is just look at product depth here, /CL. Look at today's curve. It's steeper than it's been over the last month. A lot of these are June, but even in July here, right? The fact of the matter is we're in relatively steeper backwardation of falling prices. There's a net positive cost of carry, which means that once you consider finance and storage costs, guess what? The lease rate, to kind of simplify net cost of carry here, is bigger. So all of a sudden we're looking at a lower price, but the effect is that what? This is going to converge. This is expected to converge with the spot price. So yes, we're going to have fluctuations, right? The stronger dollar, demand concerns is taking some of the fluff out of it. So you're going to get these bigger declines like we saw here and like we saw today or seeing today so far. But again, looking for this to settle out. But again, we're looking as this settles out, we'll eventually probably see prices rise unless there's that amount of demand destruction that's going to change things, right? In which case, this goes from being backwardation, then you start to see this this area here start to curve this way, right? So that's kind of a little narrow there, but you get kind of an S-curve type thing. Okay, who knows? When is that going to occur? I'm not sure we're going to get out of the oil. The oil supply issues are not going to correct anytime soon. In fact, we've got one foot on a banana peel. That's reflected in why the product depth is in backwardation. We're undersupplied. We don't really have a means to see that get fixed, except through demand destruction. That's why we're seeing the bigger down days here. But again, once the leverage works out of this a little bit, it will kind of set up based upon what we're seeing in product depth to move higher. But right now, there are some bearish trades being set up in XLE. Right? In this case, let's just go to look here in August. So going in August, 61.54, a long put vertical, buying the 61, selling the 54. Look at the volatility, buying 47, selling 54, reducing the cost. This costs less than $1 for a 7-point spread. Risk one to make 6. Looking at $54 on XLE. $54 is basically what? Retesting our lows from last December. Is that possible? Yeah, I guess it is, right? I mean, stocks typically price in weakness ahead of commodities, but this probably is not the odds on bet, right? Again, this is truly a lottery ticket. It's costing you, again, about 90 cents, but again, expect to lose. So there's some edge in here because you're buying the lower vol, selling the higher vol. But remember, this is out there. This is basically about what? It's basically about recession is imminent. And again, it may not happen. It's a lottery ticket. It's a low probability trade. You might look for a little rally or see if you can sell into it, or otherwise look for a bigger sell-off, then look for it to snap back. But so far, we're only down 2% in XLE, while /CL oil futures are down 7%. Kind of a quiet day for stocks, energy stocks, while that's happening. Now, as we consider, obviously higher oil prices, we're talking about potential defaults. I mean, certainly it circles around to high yield credit or HYG, for example. Now, high yield credit is benefiting a little bit by the fall in treasury yields, but when we start to see risk spreads blow out, that's where HYG experiences a more significant correction. You go back 3 years, this is back to the COVID crash year. We could readily see us back at 70 again on HYG. And I got some fib projections drawn in here and stuff. This is actually a retracement that we've already gone through, so I had to remove that. But oops, sorry, wrong one. Remove that one. There we go. But today in HYG, some decent sized trades. In fact, you'll see them here in Trade Flash. Scroll down here, plus 20,000 for a 22nd July 2022 72 put. You'll see minus 20,000 for 15 July, plus 20 for the 22 July, minus 20 for the 15 July. So again, you can kind of see we're selling the July 15 expiration, right? 73, and I'm not sure the 72 is in there. So, I love how this doesn't always update here. But anyway, 15 July 72 put 20,000 contracts, 73 and 72. Anyway, whatever. It's not updating. But the idea is we're closing out July. We're introducing, in this case, a 22 July. So right there at 72. Yeah, this is all messed up in here. But anyway, let's look at time and sales. You'll see it, you should see in here, 95. So sorry, 73 put, 22 July 72 put. Yeah, it's not reflecting. That's just double duplicating out. But the idea is what are we doing? We're rolling out. We're selling the 73. We're buying a week later at a 72 strike, just keeping it on and extending the downside to 72. We're at resistance right now. If the market starts to turn, again, if yields start to rise, or we start to see risk spreads blow out, this will help create downside potential in HYG. Resistance here, it's not a terrible look to try to take maybe some bearish direction. Again, maybe not necessarily buying a way out of the money put at 70, 72 for so short expiration, especially since the volatility is favoring a vertical, buying a higher strike and selling a lower strike, even out at August, for example. I mean, again, there's plenty of depth here. HYG is a very, very liquid product. Even like buying a 76 and selling a 74. Yeah, probably buying a 75 and selling a 73. Okay, we're close to 75 right now. 76, 74. Yeah, Kasha about $1 there, doesn't it? Okay, it's risk $1 to make $1. You just need this below 74. Or if you start to fall, close it if you get a 55% of max gain or 30% in the first few days. Those are some of our rules for in-out spreads here. So not a bad setup here, dovetailing with some rolling activity in KBH. I mentioned in the summary, Fed-powered speedboat. Well, Fed-powered speedboats. Right now, the Fed is out of gas. Right, they're raising rates. They're diminishing the size of their balance sheet. This has certainly been reflected in gold, for example, and silver. People talk, it's manipulated, yada, 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 but it is what it is, right? If the dollar's strengthening in real terms, the Fed is reducing the size of their balance sheet. Again, gold should go down. Demand doesn't change. Supply doesn't change a lot. That's why it's money, right? Or predominantly money, more so than a commodity. And so as we think about this scenario playing out, we're like, okay, well, where do we go from here, right? The Fed-powered speedboat is out of gas. Now we're looking for the canoe, right? So, again, all this is kind of dovetailing together. And, of course, we're going to bring up canoe right now. That's Go EV. Of course, this is it's an ugly vehicle. I think the truck looks a lot better than the van. I think it's kind of a seatbelt optional type vehicle. I mean, at least you watch a couple of videos, you only see a couple of seatbelts on the back, the side. You get nothing. It's kind of interesting, but anyway, Walmart putting an order for 4,500, maybe up to 10,000. They're looking at the lifestyle vehicle, but maybe delivering 14 to 17,000 vehicles in 2023. They're starting production in December, so we may expect delays. pricing is over 30,000, I believe. And, obviously incentives, a new EV company, whatever. But the idea is this company is up 81% today. There was some bullish activity last week. I think it was on the 5th. Again, I just kind of set it aside. It's like, it's an EV company, right? Do you really like? But again, obviously these are the one-off type of events, and that was for an 8th expiration. So 5th and 8th, I guess it went up a decent amount. Obviously, we get the news today, and it's breaking out. But on GoEV, there was a July 5. So we kind of reached that target today. But this is one to look at support. Today should be around $4, 401. So look for that to hold that area. You could look for that secondary bounce. Maybe look for this thing to push towards $6. Some other things you could look for is, what kind of short interest is there? Okay. If it has higher short interest, higher short ratio, certainly this creates an environment where you might get a bit of a short squeeze. 80% up today certainly would reflect maybe there is some short interest. Pulling it up right now, by the way. 23% of the float is shorted at a short ratio of 16 days. I mean, if you take the average volume, it's going to take 16 days to cover the 33.5 million shares that are short, 254 million shares outstanding. Okay, so we're seeing just today, so far today, 134 million shares traded. We're talking about nearly half of the shares outstanding and more than the entire float. So this is where you got to be really, really careful. When you see the entire float turnover in one day, you might see a lot of that short interest start to get covered, and so it'll lessen the impact going forward. But that's why you're seeing such a big move today. Very, very high short interest, very high short ratio, and all of a sudden you're turning over the entire float, and this more than the entire float in the first, basically 3 hours of trading today. So again, be careful here, but sometimes with these stocks that have high short interest, you might see rising volatility as you go out of the money. And that's exactly what you see. So if you're looking to take a speculative bet, again, a lottery ticket type trade that we're going to be significantly higher by August 19th, which is 38 days. You look at the 5, it's 164. You're selling 174 basically for 40 cents ish on a 250 spread, right? So you got a 210 of upside, risk 40. Again, that's not a terrible way to speculate on something like this, just in case the impossible happens. This goes to 750, right? So anyway, but otherwise, really hard one. Cat's out of the bag, but I think it was kind of fun, the idea of a canoe. but anyway, that's GoEV. Let's take a look at another stock here. So, with the decline in energy prices, obviously one of the benefactors of that is, of course, travel companies, and specifically Delta Airlines.